Hi everyone, hope you're all doing well, and today we are going to talk about EasyJet stock, and is EasyJet stock a buy after the stock has crashed by 50%? And we'll be taking a look into this one. So yesterday, I'm sure you guys saw it on the YouTube, I posted a bit of a questionnaire seeing what you guys wanted to see or the next video. InMode and S4 Capital got 21% of the vote, EasyJet got 29% of the vote, and 10 stocks I might buy got 51% of the vote. So I will cover the 10 stocks I might buy, I'll do that one tomorrow, but I just thought, you know what, these guys between them took 50% of the vote, so I thought there's quite a few guys that wanting to kind of see a video on these kind of subjects as well. So yeah, kind of going to put these two in today's video, and then I'll do that one tomorrow for you guys. So just a little bit of an update onto InMode and S4 Capital. I'm sure you guys might have seen yesterday, InMode in particular dropped to about 10%. Personally for me, I didn't buy. The reason why I didn't buy is because my position is already fully built, and yeah, I'm already up like 300% on that position. Do we need to buy more? I could buy more, but at the moment I'm pretty happy where everything is at. If I didn't have enough InMode position, if I was in a position where I hadn't fully built my position, I would have bought yesterday on that InMode dip, and that's what I would have done. But for me personally, I'm quite happy where everything is, so I didn't buy. But if you did buy, won't blame you, it was a great opportunity. S4 Capital, same again. Personally for me, it's my biggest UK holding. Do I need to buy more? No, not really. My position is fully built out in that one, so for me, no need to buy. I'm already up 70% on that one. So yeah, but if you saw that dip yesterday on S4 Capital and you hadn't fully built your position, I would have definitely bought that dip as well. So yeah, that's my thoughts on them two in particular. Also, I saw on this actual post there was a few comments about National Express. My thoughts with National Express at the moment, personally for me, is I'm not buying at the moment. I'm still 70% up. Same again, my position is built on that one, so I'm in no rush to kind of build any more than that. If National Express was a position I wanted to buy more, it would have to go lower for me personally to consider buying, because I'm happy where everything is, and for me to average up when, in my opinion, I'm happy where my position size is. For me at the moment, I'm seeing some more opportunities in the stock market that I'd rather buy. So for me to reconsider putting that money into National Express, I need to see a lot of upside, and that would also make National Express come into one of my top kind of 5 UK holdings. So for me to do that, it has to go lower, and that's where I'm personally at with National Express. Once again though, if I wasn't fully built on my National Express position, at the moment that would be one that I consider buying. So for you guys that wanting to kind of see an InMode, S4 Capital and National Express update, hopefully that little minute there was useful for you guys. But getting on to today's video, which is EasyJet stock a buy after the crash, we'll get started on that one. Now if you're on the Patreon, do go check out a live stream. There has been a live stream that's just gone up today, so go watch that live Q&A. And also on the Patreon, if you are on there, I have started buying a new stock, so go check that one out. But getting on to EasyJet, EasyJet has had a rough couple of months. If we can just go to the past couple of months, you can see this massive downtrend here, and we are currently around about £5.85. Now you can see the 52-week highs here is around about £9.21. Don't know exactly when that kind of was, because I can't see it on the stock chart, so I'm not sure if it had a day where it kind of had a massive spike up and then it gave a lot of it back. But even if you go back to kind of pre-CV situation, this stock was a £10 stock, and yeah, massively fallen off a cliff. And you can see initially it had the kind of CV dip, and then it had a little bit of a rebound, but over the last kind of, if you bought in the dip, you're up 100%. But the last kind of few days, it's kind of started to give a lot of that back, and there's been a lot of negativity out there. Now, a lot of the negativity has come from the worry, and you'll see this in Jet2, National Express, a lot of these travel stocks. There's a lot of fear out there that obviously they've lost a lot of the summer trade, and we thought they were going to get a lot of the summer trade. Back in kind of 2020, a lot of us, including me, went, 2021 should be normal for the travel stocks. They didn't get pretty much a normal summer, so that has pretty much left a lot of these companies not kind of bringing in a lot of revenue, also not a lot of profit, and it's caused a few problems, because at this situation we thought would be back to normal. The big worry now comes is that we're looking at a lot what's kind of going on in the world right now, and we're kind of thinking, are these CV cases going to carry on rising? Are we going to have a 2022 summer which isn't normal? And then you start considering, well, if you don't have a 2022 summer that's not normal, and the next few months isn't normal, especially with winter coming around the corner, if the CV cases carry on rising, what is the one industry that's going to get absolutely crushed once again? The travel stocks. And that's why you're seeing a lot of the National Express, the EasyJets, you're seeing a lot of them companies kind of, the share prices falling off the cliff a little bit, and you're also seeing a few of them now actually going, oh no, we're actually going to have to go raise more money, which we didn't think a lot of them would have to do. And EasyJet was exactly that. Obviously, you've got the fears of the CV cases, and then obviously the top up was EasyJet pretty much went, shareholders were going to have to dilute you, and that's never a good position to be in. If you're in a company and say the company, doubles the outstanding shares, you've gone from owning, 5 shares from every 10 outstanding to 2.5 of every 10 shares outstanding. It's not great, and that's what happened with EasyJet. And this was actually announced last week that EasyJet was going to dilute the shareholders. So you'll see here on Monday that the new shares were issued as part of the Budget Airlines 1.2 billion right issues. EasyJet shares were trading around about £5.72 after Monday, down 16% from the £6.80 closing price on Friday. But the stock price was flat when accounting for the dilution from the rights issue, which implied a closing price on Friday of £5.73 according to company's website. So yeah, quite often when you see these kind of right issues like on the day until like Google charts kind of like puts it into context. I think that's why a few people were actually really interested in this, is because they didn't actually realise like the calculation change, because you are getting diluted as a shareholder, which isn't great. But until Google kind of sorts it all out, it looks like, whoa, it's falling off a cliff kind of thing. So yeah, that's something to consider. But obviously you have been diluted, which is never great, which kind of puts into context of how much you've been diluted. The rights offer, which saw shareholders offered 31 new shares for every 47 existing shares already owned, was announced on Thursday last week, sending the stock down 12% that day, as the company also said that it had rejected a takeover bid. The right issue was priced at £4.10. So yeah, if you're a shareholder, pretty much, if you start to get involved in a lot of these companies where they're having to do right issues, if you don't really buy the shares, for me, it sucks as a shareholder, but you kind of have to follow through with it, in my opinion. Otherwise, you're just going to get diluted a whole amount as well. And obviously, you got the price that they are diluting at as well. You got to consider. So for me, this is why I don't like to get too involved in these sort of companies that have to then go do right issues. This is why I didn't really get involved in like a Rolls Royce, for example. It just gets a little bit ugly when you start getting diluted as a shareholder. But obviously, it's all been now done, and it's like, is this now a buying opportunity if you're not kind of a shareholder, I guess? Now, what was really interesting is that it had rejected a takeover offer, and at the bottom of this it said that EasyJet said it recently rejected a undisclosed preliminary takeover approach. The unnamed bidder has since been confirmed is no longer considering a deal. EasyJet at the time said. Now, it did turn out that this the company that was trying to acquire them was Wizz Air Holdings, which is very interesting, because I'm actually a very big fan of Wizz Air Holdings at the moment. Now, when we go look at EasyJet and what they've done previously, if we go on the past growth, you can see profits kind of stayed pretty flat. They kind of stayed around that kind of 40 million-ish. It's been in and out a little bit, but you can see here revenue has recently, in the last kind of couple of years, actually started to grow quite well. But then boom, you can see how much the CV situation has really hurt this company as well as other travel stocks. If we look at the financial health here, you can see going into the CV, and this is why you potentially I bought Jet2 over like EasyJet, is you can see the debt to equity was a little high. It wasn't awful, but the problem is then you got to calculate, okay, how long is the shutdown going to be? And that's going to obviously hurt the stock. And you can see here now the balance sheet is getting a little bit more ugly. If we actually have a look at what is on there, you can see 3.3 billion in debt, and you look at the cash, 2.3 billion. So there's a lot more debt to cash on there as well, which isn't amazing. So for me personally, when I look at EasyJet stock, and you look at the discount that it's on, and then you consider what kind of financial state it's in, for me personally, I'm not really interested in buying EasyJet, just because historically it's the company that's done quite well. Like, it's not like a situation of a Rolls Royce where previously going into CV it was an ugly company that was struggling for revenue growth, struggling to make profit. This company was making profit, it was making revenue, which isn't terrible. The problem I have here is that you've got a company here now that has a lot of debt to start repaying down, which isn't great. And to be honest with you, if I was an EasyJet shareholder, I'd have been a little bit annoyed, because actually, rather than doing a rights issue, I would have been quite happy for. I'm sure there would have been a premium offered for like on the EasyJet, and I would have probably took it unless I was going to be down on that position. I don't know exactly what Wizz Air's kind of premium would have been on the company. I don't know if it would have gone probably around about £8-ish. So only if you were kind of at the peaks here, you'd be a little bit annoyed. But yeah, most of you guys that probably would have bought recently, that wouldn't have been too bad. Um, so yeah, for me, EasyJet, going back to the point of EasyJet, for me, it just doesn't have that much like revenue and profit growth that I would have wanted, and the balance sheet's just a little bit too ugly for me. Um, if it was a bit better balance sheet, I would be a bit more tempted. And the thing that I've got to consider is like worst case scenario, what happens if the CV gets worse? Then this company's going to have to take on more debt, more dilution, burn through that cash a little bit. It's just not great. So for me to kind of take one of these like risky plays on, it just needs to be a bit more solid financially, and it needs to be a little bit better, making sure it makes profit and revenue, and also it has a solid kind of balance sheet there. For example, one that I potentially would be more tempted to go is like Jet2, because you look at Jet2 and you can see that they've been growing profit and revenue, and the revenue growth's a lot more solid. And if you look at the financial health of the company, there's a little bit of a spike on the debt to equity side of it, but you look at the debt here and there's 700 million debt to cash, so that the cash is still quite in control of the debt here, which is a lot more better for me. So that would be potentially one that I more would consider to play, especially because when you look at this one, this is one that has had a massive share price drop recently as well. You can see, down to £13, down to £11, and these could carry on downtrending as the CV kind of worry hangs around this, and that'd be one more that I'm potentially looking at. So yeah, kind of going to the point of EasyJet for me, would I buy this one? Personally, not for me. The only time I would buy EasyJet for me is if we kind of got around to the back end of the year and cases weren't terrible, because that's my big worry, is that cases get bad and then this suffers even more. So for me, yeah, if cases weren't terrible and it looked like they could have a normal summer, that would be potentially more where I play EasyJet at the moment. But while there's a lot of uncertainty, for me, just not one I would touch at the moment. And I think there's a few better stocks out there, especially non-travel related and in the travel space. Obviously, Jet2, National Express would be the ones that I look at. But it's not the most. It's not it's not a terrible stock. If you were to play it, I won't blame you. It's not terrible. But yeah, I think personally for me, my opinion, there's better choices out there, and that's where I'm at with it. So yeah, hope that video was useful anyway. And yeah, tomorrow I'll do the 10 stocks that I might buy anyway. So hope it was useful. If it was, hit the like button, and I'll see you in the next one.